Have you ever wondered how you get a tax return because of an RRSP contribution? I've had conversations with people who think they get all the money back in their taxes. Like if they put in a $2,000 contribution, they get $2,000 back on their taxes. But that's not the way it works. So this video is going to be wickedly exciting because we're talking about taxes. In fact, some would say this might be a fantastic video. So let's say for a second we don't have a progressive tax system. There is just one single tax bracket and one single tax rate of 25% for all income. It doesn't matter how much money or how little money you make, you've got to take 25% and give it to the government. Now let's also say that you have a job where you make $100,000 a year and you're on salary. Well, of course, 25% of that $100,000 means every year you have to pay the government 25 grand. Now, because you're salaried and you're paid bi-weekly, all those numbers break down to a bi-weekly amount. Every other week, your boss is going to give you $3,846. I'm rounding. And that's your gross income. Now, off of that, your boss is going to take $961 and they're going to prepay your taxes. So you add those numbers up throughout the year, you're going to make $100,000 of gross income and you're going to pay $25,000 in taxes. So what happens if you put $10,000 into an RRSP? Well, you know from the previous videos that I made that an RRSP contribution lowers your taxable income, which means textually speaking, you didn't make $100,000 last year, you made $90,000. Now that $90,000 is still subject to the 25% tax rate. The amount of tax owed on $90,000 of income is $22,500 for the year. So when you go to file your taxes at the end of April, because everybody waits for the last possible second, the government's going to realize that you've already prepaid $25,000 for your income tax, but you only should have paid $22,500, which means you overpaid by $2,500, and the government gives you a big whoopsie doodle. And yes, I absolutely do think that the government says whoopsie doodle when they see this. Because you overpaid, they have to give you a tax refund of $2,500. So yeah, just like the other videos, I'm not using real tax brackets and all that kind of stuff. It's just a really oversimplified example to show you how it works. When you prepay your taxes through an employer, they kind of guess how much you're going to owe at the end of the year and tax you accordingly. But it's all based on the amount of income that you bring in. So if you do something to lower your income, that means you've probably overpaid your taxes and the government has to give you that money back. Now, as much as we all love a big tax return, it's actually to your advantage to not get one. Here's what I mean. When you overpay your taxes throughout the year, that's money that you could be using for something during the year, like paying down debt, investing, or anything else you want. Fantastic. Oh, frig, I'm funny.